What's going on, everybody? My name's Israel and you're watching Invest with Izzy. Thank you so much for tuning in. And today's video, I'm going to be talking about Bitx, which is the 2x leveraged Bitcoin ETF futures. So you probably wanted to find out more information on this stock before you invest in it. Great. I got this video covered for you. So just stick along and I'll teach you guys what to look for, what not to look for, and should you invest in it. Let's go. All right, so I got this thing right here in the mail because I myself was invested in it a couple weeks ago. I recently just sold the stock, and yeah, so as you guys know, the stock is called Bitx, right? And just for proof, look, it's got my name on it, Mr. Israel, right there. I live in Edmonton. See, I just crossed out a few other informations, but yeah, they sent that to me personally. I wasn't even expecting it, but I guess they send it to anyone who's invested in it because they want you to learn about it so you don't go and try to sue them for the money you lost, right? That's mainly probably why they send it. So this little paper that I showed you guys, it's called the summary prospectus, and that basically just means a summary of what they do in operations for this Bitx stock. So Bitx is a 2x leverage futures ETF, and as you guys know, now there's like actual spot ETFs that track exact price of Bitcoin, but this one they started June last year, 2023, because the spot ETFs wasn't approved yet. So this is why they started with the futures, because futures is not the same as spot. All right, I'm not going to get too deep into that. So we're just going to actually dive into actual important information that you guys should know for this one. So let's just go into the browser. So this right here that I'm looking at, this is the volatility shares, which is basically the company that gives this Bitx 2x futures. So how do you get there? You just search up volatility shares, right, on Google, and then when you pop up to the website, they have a few different options for ETFs, right? So they have the ETHU, Bitx, blah blah blah. So they have about 5. So you just go to Bitx. That's how I was able to find it. All right, guys. So there you go. All right. So I recommend you guys to read before you invest in something like this, because you want to know what you're getting into. All right, that's what I did. All right, well, I did it after, so I'm not gonna act like Mr. Perfect. So anyways, so you see here it has how Bitx works, summary prospectus, so it has all these informations. So all of these 4 in the bottom is just kind of like more financial reports and stuff. You see, they actually give their annual reports of what they did and what they sold and what they bought. That's not too important. What you really want to read is how Bitcoin works. I mean, how Bitx works, summary prospectus, and prospectus. And it goes, the deeper you go, the deeper it explains. So how Bitx works is a very quick summary, and even that is just basically enough to understand it. Summary prospectus is it was 18 pages, which is the booklet that they sent me. All right, so you see that, and then you got the prospectus. All right, so I did some research and I read the whole summary prospectus. So that's really all you got to learn. So as you guys can see, this is exactly the same sheet I got here, all right, just online. So I just wanted to break it down to you guys. Before we get deeper into it, you're gonna probably ask, okay, Israel, why would I just invest in this Bitx if it doesn't give me exact 2x returns, and I can just go on a Bitcoin exchange like Coinbase or a simple exchange and just buy Bitcoin, or just go and do leverage trading? Yeah, you simply can do that. But the reason why a lot of people choose Bitx is because it's a stock, all right? You can't put a stock in like your 401k. I mean, you can't put a crypto in your 401k for my Americans, and you can't put a crypto in like your RSP for my Canadians, right? Or TFSA or Roth IRA, all right? Like you can't put it in that because it's a crypto. It hasn't been regulated enough for you to put it in there. And there's a lot of tax incentives for having it in your bank and your retirement account because, like, for example, for us, TFSA, you don't get taxed on it. Like, it's a tax-free savings account. And I'm pretty sure it's the same for the States, right? The Roth IRA. It's the same. It's basically the same thing with different names. So you don't get taxed. So this is why people choose to do things like this, because, and it's more safer, right? Because it's a stock, right? But crypto exchanges, a lot of people aren't really used to it and can trust it 100% with a lot of money on it, right? So even for me, that's what I did. I put about half of my portfolio in there. I mean, 1/3 of my portfolio in there just to be safe, all right? That's another reason why I picked it. All right, guys. So I'm going to go through this document and just kind of highlight the main points. All right, not to make this too long. So, like I said, Bitx is a futures 2x leverage stock. It's not a crypto, it's a stock, okay? You can buy it on the stock market. All right, that's what makes it great. So, their fund, all right, Volatility Shares, they're like a company that goes out and buys these futures contracts for you, and then you just basically make money off of the price action of Bitcoin. So they buy Bitcoin futures contracts, so they can go on a decentralized exchange slash DEX and just go buy Bitcoin, and then whatever gains they make, they basically put it back into the stock that you invested in. So you make money off of the price action. So when you buy Bitx, you don't actually buy Bitcoin. Like they personally don't even have to go to buy Bitcoin because this is a future. It's the difference between a spot, right? Like I explained earlier, like the spot ETFs that they release now. Spot is always they have to go and buy that asset, whatever that you're buying, right? Like right now they have the Ethereum and Bitcoin spot ETFs in crypto approved, all right? So it's totally different. This is just futures, all right? So what makes this different, guys? You see here highlighted. It says, for periods longer than a single day, the fund may lose money if Bitcoin's performance is flat. And it is possible that the fund will lose money even if Bitcoin increases. So that's very important to learn, guys. So this stock, it's better for my shorter term traders, guys, because it basically guarantees more of a price action in a single day than over let's say a month, because in over like a day there is more like, okay, rise fall or flat, and that's bad for their fund performance. All right, so another thing, it says the fund does not directly invest in Bitcoin. Instead, the fund seeks to benefit from increases in the price of Bitcoin futures contracts. All right, so just like I explained earlier. All right, and then this part, it basically says, in order to qualify, by law, they have to sell a certain amount to stay under a certain amount invested by law, because actually Volatility Shares, they're not even a US company. All right, they're in the Cayman Islands. All right, right here, the Cayman Islands. All right, under the laws of the Cayman Islands. So they're not even in the US. So that's why they have to qualify with these at every fiscal quarter. They have to buy and sell a certain amount of assets, because they can't have too many and they can't have too little. So that's another thing you should know. Okay, and another thing you should know, guys, is it says before fees and expenses, they guarantee to correspond 2x of Bitcoin's price action. So this is not even after fees and expenses. So this is technically just slightly below 2x leverage. All right, so another important thing that I want you guys to know is the fees and expenses of the fund. So this fund in total has about 1.9% in fees and expenses, all right, to whoever buys it, right? Let's say if I have $10,000 and I buy $10,000 worth of this stock, I'm gonna pay 1.9%, all right? So that's about $190. So, you know, that breaks down from management fees, distribution, acquiring fund fees, expenses, just, you know, just random expenses. All right, so in this example, all it shows you is, let's say if you have $10,000 over 10 years, how much you pay in fees, right? So it compounds too, right, guys? Like, and that is estimating that you have a 5% return every year, right? So you can just see over time, and not only that, depending on how much money you have, would really impact the amount of money you make. Especially if you're in the millions, man, that's a lot of money that you're turning over just by paying fees. All right, so that's why the more money people get, like these big hedge funds and all these people, they're really specific, and they're really careful of how much fees cost, right? A good example of that is right now Grayscale, all right, versus like a BlackRock or ARK Invest. Their new ETFs, they're doing bad. Grayscale is doing terrible because their fees was like 1.5% or something, and all these ARK Invest and BlackRock, their Bitcoin ETF fees are like 0.25, 0.5. So that, you might think that's a little bit, but when you got a lot of money, that's a lot of money, man. Right? Pun intended. When you got a lot of money, that's a lot of money. Pun intended and not pun intended. So yeah, it really affects your portfolio turnover. And which brings me to my next point. This portfolio turnover is basically the amount that they buy and sell also affects the fund, because if they buy and sell a lot, they're also incurring a lot of fees by buying and selling. Because at the end of the day, you got to keep in mind that they are also just another person, basically just registered under a company buying and selling. So they're also going to get hit with fees. Okay. And so going down here, another part that I want to highlight, guys, is it says here, the fund intends to exit its futures contracts as they near expiration and replace them with new futures contracts with a later expiration date. Futures contract with a longer term expiration may be priced higher than futures contracts with a shorter term expiration. So that basically means, right, like near expiration of the futures contracts that they buy, typically they want to sell it because they want to roll it over to the new one, because they're going to have to pay a lot of fees. So, and they typically try to stay in shorter term contracts, and typically the futures contracts are in 1, 2, and 3 months, right? So they do whatever they have to do in order to save money with the fund, because the fund's performance on how many fees they pay also impact your pockets, because at the end of the day, it reflects in the stock's price. So it's not just based on Bitcoin's price action alone. You really have to recognize that it's not just based on Bitcoin's futures price alone. All right, so scrolling down here, guys, I just want to show you, after this part right here, another important part is when it talks about Bitcoin. And just in general of this whole document, guys, you really want to take some time to read it if you want to further your knowledge on Bitcoin and how a lot of these futures contracts and futures stocks work. This part is very interesting and important. I learned some new things about Bitcoin just reading this. You guys should really read it, but it just basically explains the very fundamentals on Bitcoin and how it works. All right, guys, so scrolling down from this Bitcoin section, the next section I want to talk about is this section right here, reverse purchase agreements. So basically what this summarized is, each quarter, like I said, this fund has to abide with some laws because they are a foreign company under the 1940 Act. They have to sell a certain amount to stay within a range. So Sometimes what they do is they might invest in other stocks, even like maybe a Tesla or Apple or whatever, and that value of those stocks, like they can sell it to another company so they can meet their requirements, and then later they repurchase those stocks at a higher price or whatever price they agree upon, because they want to probably still keep those assets, but just to abide by the laws, that's what they do. All right, so that's basically just in a nutshell what that was talking about, that section right there. All right, so the last section in this document that I really want to talk about is basically the rest of the whole document just talks about different type of risks, right? Like aggressive investment risks, all right, compounding risks. So it's basically self-explanatory just in the the title of the the paragraph itself, right? Compounding risk. When you compound it, it gets riskier, right? Especially at 2x. Aggressive investment risks. It just talks about how aggressive, uh, the risk is in Bitcoin. A leverage correlation, target exposure. A rebalancing risk when they rebalance their portfolio, their management risks, right? When they have to manage so many things to keep up with the 2x. There is so many risks, and they just go through it the rest of the document. They just go through risk on risk on risk. So that's basically all the rest of the document. And believe it or not, I read the whole thing just so I can feel confident, in talking about this to you guys. Liquidity risk. Sometimes there's not enough liquidity in the markets. What's another one? Tax risks, right? Sometimes they have to pay too much taxes depending on how much they buy and sell, and when they sell. So there's a lot that goes on in this ETF that you guys have to keep in mind of why it's so volatile or why it might not do as good. All right, guys. So, and then that's basically it for the document. Basically, one of the last things I want to show you guys is just the Bitx stock compared to Bitcoin's performance. All right, so you might look at it and you say, well, like it tracks Bitcoin pretty good, man. Like, okay, so let's take a look. For example, right back in March, the all-time high was at basically $60, right? And then the all-time low recently was $19. All right, so that's a 68% loss. All right, cool. We understand that. So yeah, it should be the same, right? Yeah, cool. For Bitcoin, so yeah, the all-time low. So 33%. So it's slightly above 2x, right? But what you don't get is realistically the price should be around here, because let's say that little part right there, as you guys can see, right? That low right there should be corresponding to around this area, to where that all-time low was as of recent. But here we can see it's way lower. It's around this level right here. So if you would have invested in February, it went up a lot of percent. For Bitcoin, you're basically not really there, right? But for this one, you're back to square one. So this is why you can't stay too long in it, because it also goes even more than 2x sometimes to the downside, especially if Bitcoin's performance is flat. That's why you really have to understand, guys. So this is the difference between Bitx and just regular leverage on a decentralized exchange. All right, yeah, so just to summarize this video, I hope that was really a wake-up call, and to open up your eyes to what you're investing in when you're investing in Bitx. For me personally, I want to say it's good when you want to buy low and for sure it's about to spike through the roof, Bitcoin, so you can get in real quick and sell when it rises. But not if you want to hold 3 months, maybe even a month, even 3 weeks, 6 months, a year. Like, you're being risky because it's not just gonna keep on going up. All right. So you know that's the pro, right? If you know for sure, okay, Bitcoin's probably about to fly, right? Things like that. A con would be like you can't sell over the weekends, right? So imagine if Bitcoin hits an all-time high on the weekend. Unfortunately, you can't sell. All right. So it's just like the regular other ETFs, right? You also can't sell. So that's kind of the con right there. So it's up to you to realize what you want, you know, what your risk is, because there is a lot of risk to this thing, right? So this is not no shot to volatility shares. You know, thank you for sending me that document or anything like that. This is just what I've gathered in terms of information off of this document that can help you guys, and it also helped me. But yeah, this is definitely a good thing if you want to just, you know, not pay taxes, things like that. So with that being said, I really hope you guys like the video. Let me know what I can explain more, maybe in the comments to you guys if you have more questions, and maybe what I can do better next. I appreciate you guys for watching, and my name's Israel, and you're watching Invest with Izzy, and just like that, I am gone. Peace.